Let's get to our floor show right now. Joining me here on set, Allspring Global Investments Senior Portfolio Manager and co-head of the Special Global Equity Team, Bryant VanCronkhite. It's great to have you here. And one of the things that you say is kind of in a broader macro sense is that we had this low quality rally in Q3. It was this move to buy everything. You're saying for Q4, we've got to get much more specific.
That's exactly right. It's especially true the farther down cap you go, so the smaller companies. We saw investors behaving in a way that's much like children at a birthday party. When the piñata breaks open, they dive in, right? And we gave investors permission to dive in. We had the Fed cutting rates. We had the China's 90-day pause on tariffs. And investors dove in and just grabbed everything tied to themes, but they didn't start to sort out who the real winners are yet. And that's what we're going to do next. We're going to start sorting out the winners and losers, and we'll be more discerning as investors.
So are those still AI plays or are those ancillary plays? Is that more energy? Is that infrastructure? Or even maybe it's small, mid-sized companies?
It's all of the above. We're seeing the direct plays on AI, the early winners in the build-out phase, but you also have the ancillary around power, battery storage. But as we look forward, what we want to do is use these dips in the market, not to get fearful, but to get positioned. We want to expand in the AI theme around companies that are going to be the next phase of the build-out, then the companies that are going to help us with implementation, and then those who are going to help us realize it. And there's different waves of AI, but that's still a healthy trend that investors should be playing.
It's just, again, to get more specific, and you mentioned small cap stocks being bought without discrimination. I've seen some commentary that maybe the small mid cap space could be a weaker component. But really quick, Teradyne, Keysight, CDW are some of the plays that you like. I want to kind of pick up on the other side of that AI story, though, and that's this Challenger Gray and Christmas report. I mean, investors are data starved. We basically have nothing right now, and that's frustrating with the government shutdown still underway after 37 days. But this Challenger Gray and Christmas was pretty negative, pretty bearish for the labor market. And the head of the company actually came out and said, this is AI efficiency. This is what's happening with companies. Does that concern you at all?
It doesn't concern me yet. We're definitely seeing companies talk more about how do they utilize AI to optimize their margins, and we're seeing them do that through laying off workers. That's going to continue, and there could be periods of digestion for investors and for the economy to handle. But the reality is we have a lot of tailwinds that are going to overwhelm that. The Fed cutting rates is going to push stimulus through. We have the stimulus from the One Big Beautiful Bill still working its way through, cutting taxes, and we have the big CapEx spend still ahead of us. So I worry about labor, and it's the focus of the Fed for very good reasons, but I don't see it falling off a cliff right now, and it's not something I'm fearful of over the next 12 to 18 months.
Yeah, we've gotten some Fed commentary from Hammock saying that basically the labor market is softening but still healthy. Goolsby's, of course, not happy about the fact we have no data. Really quick, you say that we should be looking for market gut checks. What do you mean?
We're going to get corrections. As investors, we sort of get used to the market just going up, up, up. That's not how it works over time. We're going to get some gut checks, some market corrections. Again, use that not to get fearful, but to reposition yourself. That's going to be the key, I think, in the last quarter of the year here and getting yourself ready for 2026.
How much of the sell-off do you think is the shutdown right now?
That's really hard to say, but I am hearing more and more implications that it's becoming real, and it's impacting consumer spending, and we're seeing it in the numbers. We're hearing it in our conversations every day with CEOs and CFOs. So every extra day from here on out, it gets more and more real.
I think that there is a real impact to GDP. If you're looking at $4 billion in losses for the travel industry alone, that cannot be ignored, I think, those numbers, Bryant. So very good perspective from you, Bryant VanCronkhite. Thank you for being here.